Welcome back to the Daily Crypto Roundup. It's Tuesday, November 4th, 2025, and the crypto market has started the new week in a cautious mood. The tone across the board feels heavier than it did on Friday. You can sense it in the order books, you can see it in the charts, and you can hear it in the analysts' language. Less talk of rallies, more talk of resets. After one of the most volatile weekends we've seen in months, traders have woken up this morning to a red screen, a wave of liquidations, and a bit of self-reflection. That confident momentum we felt through October has given way to something more defensive. The big question now is simple. Is this just another dip in a long uptrend, or are we watching the start of a deeper unwind? That's exactly what we'll dig into today. Here's what we're covering. First, we'll break down why the market has turned risk-off again, what triggered the sell-off, and where the biggest liquidations hit. Second, we'll focus on Bitcoin, the price levels that matter, the psychology behind that $104,000 zone, and what happens if bulls fail to reclaim it. Third, we'll look at sentiment, why the fear and greed index has sunk back into extreme fear, and whether that's actually a contrarian buy signal. Fourth, we'll zoom out to the infrastructure story, Visa quietly expanding its stablecoin settlement network across multiple chains. It might not sound dramatic, but it's one of those stories that a year from now, people will call the moment the rails went mainstream. And finally, we'll close with the global headline of the day, BlackRock's iShares Bitcoin ETF, preparing to launch on the Australian market, opening the door for millions of new investors to get regulated exposure to Bitcoin for the first time. Before we get into it, make sure you're following the Daily Crypto Roundup on Spotify, Apple, or wherever you listen. And if you enjoy the show, tap that 5-star rating. It really helps the channel grow and tells the algorithms you want to hear more. Let's start, as always, with the numbers. Bitcoin, $101,424, down just over 5% in the past 24 hours. It's trading below that 104,000 level that everyone's been watching. It was support for most of last week, but now it's resistance. And that change in character is important. Ethereum, $3,304, down nearly 9% on the day. A tough session with heavy selling overnight, though it's still holding a few percent above the intraday low. BNB, $931, down around 6.5%. A sharp move lower, reflecting the general pressure across the altcoin market. Solana, $156, off 6.5%. After months of outperformance, Solana is giving a little ground back. Still, volumes remain strong, a reminder that momentum cuts both ways. XRP, $2.21, down about 5.5%. The token is consolidating after a steep drop last week. Volatility has eased slightly, but traders are cautious. Dogecoin, 16 cents, down roughly 5%. Not much movement since the weekend, just a slow drift lower as leverage unwinds. Cardano, 52 cents, down just under 6%. Volume is moderate, suggesting most of the fast money exited early in the session. Tron, 28 cents, down about 1%. A relative outperformer today, holding up better than most majors as network activity stays steady. Avalanche, $15.86, down around 5.5%. A weak session overall, though the price is still hovering above the day's low. Chainlink, $14.62, down almost 5%. Soft tone, but controlled, traders still see it as one of the sturdier names in the DeFi infrastructure space. That's your top 10 snapshot. A clear risk-off session, but no panic, no flash crashes. Just a methodical reset across the board. The headline across nearly every desk this morning is the same: forced liquidations. The global crypto market cap has dropped close to 4%, sliding to around $3.5 trillion. That's a big move for a single day in November, especially considering how stable October had been. CoinGlass data shows more than $480 million in long positions were liquidated across major exchanges in just 24 hours. That's the largest single-day wipeout since late September. When leverage builds quietly in sideways markets, it doesn't take much to trigger a cascade. One small drop hits stop losses. Those stops trigger more selling. Market makers pull bids to stay safe. And before you know it, a small wobble becomes a full-scale flush. Add to that a stronger US dollar, hawkish remarks from central bankers about delaying further rate cuts, and you've got a perfect mix for a crypto cooldown. Traders who'd been riding borrowed momentum are being forced to unwind, and that's exactly what we're seeing play out today. It's not panic, though. The liquidations are big, but orderly. Funding rates across major futures platforms have already flipped back to neutral, suggesting the excess leverage has been flushed out quickly. Bitcoin's story today is less about emotion and more about levels. The 104,000 mark is the line everyone's drawing on their charts. It held as support for days, and once it broke, the tone changed instantly. Early this morning, Bitcoin dropped as low as 101,000 before stabilizing. It's a clean technical move: break support, test lower, then attempt a rebound. The question now is whether buyers have enough conviction to reclaim that zone. Ali Martinez from CryptoQuant put it simply: as long as BTC closes daily candles above 100,000 and open interest continues to unwind, the structure remains constructive. Meanwhile, analyst Michael van de Poppe warned that if the price loses momentum here, the next magnet sits between 96 and 98,000. A healthy correction, but not the end of the cycle. Order books on Binance and Coinbase show thick bids just below 100,000, which suggests buyers are ready, but not in a rush. It's controlled. No rush for the exits, no desperation. That's what a mature market looks like. So for now, this looks like consolidation in a wide range. A reclaim of 104 would change the narrative instantly. Until then, expect cautious positioning. Markets don't just move on numbers, they move on emotions. And right now, that emotion is fear. The Crypto Fear and Greed Index, which tracks volatility, trading volume, and social sentiment, has fallen to 22 out of 100. That's officially extreme fear. It sounds bad, but in practice, these readings often mark the moments when smart money starts buying. When retail sentiment gets too negative, it tends to signal exhaustion rather than collapse. On-chain data from Sentiment shows exactly that. Whale wallets have been quietly accumulating since Sunday. Long-term holders aren't panic selling. Exchange reserves continue to decline, which usually means more coins are being moved off exchanges into cold storage. Still, the retail crowd is nervous. Search data, Reddit threads, and X timelines are filled with speculation about another crypto winter. It's that mix of anxiety and disbelief that usually defines mid-cycle pullbacks. People convinced the rally's over while institutions quietly accumulate. So yes, sentiment is fearful, but the underlying behavior says otherwise. Let's pause for a moment. Then we'll dig into what this means for the next phase of the market. Now, while the spotlight stays on price charts, something far more significant is happening quietly in the background. Visa has expanded its stablecoin settlement system, and this is big. The payments giant now supports 4 stablecoins: USDC, PYUSD, EURC, and XUSDT, across 4 blockchains: Ethereum, Solana, Avalanche, and Polygon. This means merchants and banks working with Visa can settle transactions almost instantly across multiple chains and convert directly into more than 25 fiat currencies. Huey Sheffield, Visa's head of crypto, said, "Multi-chain stablecoin settlement reduces friction for cross-border commerce and brings us closer to real-time money movement globally." It's one of those stories that rarely make the front page, but it's laying the foundation for mainstream adoption. Think about it. Stablecoins are already handling billions of dollars a day in value transfer. By integrating them into Visa's network, you're effectively blending traditional finance rails with blockchain speed. For stablecoin issuers like Circle and PayPal, this means broader interoperability. For users, it means faster payments with fewer intermediaries. And for crypto as a whole, it means legitimacy. Because once Visa starts processing stablecoin settlements at scale, it's no longer a crypto experiment. It's just modern finance. That's why this matters, not because of today's price, but because of tomorrow's infrastructure. Now, we end today with a story that could reshape how capital flows into crypto across the Southern Hemisphere. BlackRock's iShares Bitcoin ETF, the same product that drove a huge wave of institutional inflows in the US earlier this year, is preparing to list on the Australian Securities Exchange. Once approved, it will let Australian investors gain direct, regulated exposure to Bitcoin through their existing brokerage accounts. No offshore workarounds, no self-custody barriers, just a standard ETF inside the country's financial system. Alex Prochaska of BTC Markets called it a huge credibility moment. It places Bitcoin right next to equities and ETFs in everyday portfolios. That's what makes this so powerful. Every time a new region opens the door to Bitcoin ETFs, it normalizes the asset further. We've already seen it in the US, Hong Kong, and Singapore. Now Australia joins the list. And with that, Bitcoin inches one step closer to becoming part of the global financial mainstream. Not a niche trade, not a speculative fad. A legitimate asset class that sits beside gold, bonds, and stocks. This matters for liquidity too. ETFs bring long-term holders, institutional funds, and regulated custodians, all of which stabilize the market over time. The more jurisdictions that approve these products, the more robust Bitcoin's base becomes. So even on a day when prices are down, the structural progress underneath the surface keeps moving forward. So what do we take away from today? In short, volatility hides growth. Prices are down, yes. Sentiment is fearful, sure. But the infrastructure is maturing faster than ever. Visa is integrating stable coins. BlackRock is expanding ETF access. Exchanges are cleaning out leverage instead of imploding under it. That's what progress looks like. Messy, uncomfortable, but ultimately healthy. If you zoom out, crypto isn't breaking down. It's evolving. This pullback is the kind of shakeout that clears the road for the next advance. The weak hands exit, the strong hands accumulate, and the builders keep building. So keep perspective. Markets breathe. They expand, they contract, they reset. But the direction of innovation is still forward. That's all for today's Daily Crypto Roundup. Make sure you're following the show and leave a 5-star rating if you haven't yet. It really helps. Drop your thoughts in the comments, share what you're watching, and as always, we'll see you at the top.